Hey folks, Dan Bird here with a daily scan for Monday, the 27th of October. Hope everyone had a great weekend. We're starting into the last week of October, usually is the beginning of the end of year rally. We've got lots of good earnings coming up. Earnings are coming in pretty well so far. So the market is responding, of course. We've got some big ones I'm going to look at today. As we head into usually the best time of the year, this is also the week where mutual funds will rebalance their portfolios, and the quiet period usually ends for stock buybacks. So companies will start to buy back their shares once again as we head into November. That's another thing that pushes the market up. So expect a rally into the end of the year, regardless of what the news says. I think we're going to be getting a rally, and I think we're going to hit 7,000. So we'll take a look at some things here this morning. First, of course, let's take a look at what the market's doing this morning. It is currently 11:50 a.m. on the East Coast, so the market's been open for a little while. If we look at the 10-minute charts, you can see the gap up right there, right here. Gap up at the open, just kind of consolidating sideways right now. And this is when things might start to move. Notice money flow, though, has been negative this morning, which is really interesting. There's some other interesting things I noticed when I was updating these. So we're just heading sideways after the gap up. Market continuing to go higher. Technology is leading. In fact, technology is carrying the market. Discretionary is up slightly. So that's usually Tesla and Amazon. Communications is down, or flat, let's call it, down from last week, but flat for today. That is primarily Google and Meta and Netflix are the three primary ones in that group. If we look at the defensive sectors, those are all negative. Staples, utilities, real estate, all down, which is positive for the market. The cyclicals, though, is really interesting. Cyclicals are all down as well. Financials, healthcare, industrials, materials, energy, all significantly down this morning. So that's telling me that this whole thing, this whole gap up and this whole consolidation that we're in right now is due solely to large cap tech stocks, most of which report this week. Rotation, growth versus value is up, which you would expect if money's moving into those large cap tech, which are growth areas. Discretionary is outperforming staples. Technology is up. Semiconductors are up. Transports versus the industrials are pretty much flat. But again, this all shows that money is rotating into large cap tech, which is reporting this week. And here's the breadth. Everything is above 50%. It's percentage of stocks above their 20, 50, and 200. Definitely over 50%, and looks like they're moving up. Bullish percent index is starting to move higher. On the small and mid caps, the Russell 2000 also had a gap up, but it is much weaker than the S&P. You can see, remember the S&P was just consolidating sideways, but Russell 2000 is actually moving lower, and you can see down here, Russell 2000 versus the S&P. Money is actually better in the S&P. This means it's underperforming the S&P. Mid caps are underperforming large caps, and small caps are underperforming large caps as well. So again, money is rotating into those few large cap names. Here's the breadth. Breadth looks pretty good on mid caps as well as small caps look similar. So breadth looks pretty good there. NASDAQ 100 moving up as you would expect. It looks almost the exact opposite of the Russell 2000, actually. Up volume minus down volume is higher. Advancers minus decliners is slightly higher, but not too impressive. So this is NASDAQ 100, but the VIX is very low. VIX is now at 16, so it's back below 17. So the VIX is supportive of or very constructive for this market. We can look at the VIX over here as well, and we'll see right there below 17 once again had a big spike and then pull all the way back again. So this is the start of the end of year rally, I believe. So there's 17, here's the 20. So we're back below 17 again. Very constructive, very bullish for the market. S&P gapped up. 10-day moving average of the put call ratio now is rolled over. So more people are buying calls. Everyone's bullish. 10-year really isn't doing much, sitting right above 4%. So I've talked about this for a while. The 10-year, let me go look at the 10 years right over here. 10-year Treasury yield right here. And you can see as the 10-year goes down, the TLT or the 20-year goes up. So they are inversely affected with each other. 1 month Treasury, this gives you clues for what the Fed's going to do. Clearly, the Fed is going to cut, and that's coming on Wednesday. The Fed will be cutting. So that is going to be bullish for the market as well. So that should be very constructive. So all of these things imply that we are in a very bullish cycle. This is a 40-year cycle for the 10-year Treasury. You can see it's up here, just in this range right now, between 4 and 4.5. So pretty much since 2023, it's been in this range, and I expect it's going to stay there for a while. So that's what that looks like. Let's go take a look at. Let's see what I want to do since it is Monday. I'll show you some of the updates over the weekend for on the index charts. This is the monthly index chart from Thinkorswim for the S&P. You can see momentum was heading lower, similar to what it did back in 21 and 22, which was a bear market. But now it's pulled out of that. So no, it's no longer looking like 22. Looks more very bullish right now, continuing to head higher. Down here you can see gold, and this is interesting too. Gold and Bitcoin, these are the indexes. So gold, this is for the week. Gold outperforming Bitcoin. One other thing that I thought was really interesting on the charts page here, when I updated all of the sector groups, let's look at the sector performance right here for 1 week. And notice what you've got: Bitcoin at the top. Bitcoin has been doing really well lately. And gold at the bottom. Gold is down again today. In fact, it's below its 50-day, I believe, or maybe the 21. We'll look at that in a minute. But notice Bitcoin at the top, gold at the bottom. But if I go back here and look at the 3-month view, it is completely flipped. Oops. Oh, you know what? I might have put these in the wrong. Nope, there's 1 week. Oh, yeah. But Bitcoin at the top, gold at the bottom for the 1 week. 3-month, Bitcoin at the bottom, gold at the top. So in just 3 months, these two have completely switched places. So let's go take a look at gold. And for this, I'm going to use the bias matrix chart right here. Down here are these are all of the asset classes, indexes, sectors, industry groups, relative charts, commodities, metals, and currencies. And each of these has a chart that you can click on. You can see there's gold right now. So gold had a big, huge move down by the dip, stepped in for 2 days, but not very convincingly, hit the 8-day, and now it's below the 21. So gold looks like it's collapsing. It depends on how you want to look at it. I mean, this is a parabolic move, so they are never sustainable. So parabolic moves are not sustainable. It's come down quite a bit from 400 down to 367, 402. Let's see what the high was. High right here was 403, and right now we are at 365. So basically 35 points. That is roughly about an 8% decline for gold, and it may continue to drop down here to the 50-day, perhaps. So it might get down here to 350 before it reverses. We'll see. Gold is definitely going lower. Look at silver is also in here as well. I talked about silver a while ago. I showed you the chart over the last 25 years. Only 5 times has the relative strength ever been as high as it is right now, and every single time it collapses and drops like a rock after that. And that looks like what's happening right now with silver. So I talked about this a couple of weeks ago. I warned people to be careful that this is kind of the trend, the typical way that silver usually moves, and it is certainly doing that right now. I can show it to you real quick. I do 25 years. I'm going to do this on a weekly like that. Let's do 20 years because the data doesn't go back. Let's actually do it for, instead of the ETF, I'm going to do it for spot silver. There's spot silver right there. Now I can do 25 years. So there's silver, and we'll put an RSI, relative strength, on here. Relative strength line is right here. And relative strength usually moves between 30 and 70, 70 being overbought. But I am going to make it even more overbought and put 80 on here. Make it red. And let's make it the same height. So here's the this red horizontal line. You can see how many times it's done that, including this one. 1, 2, 3, 4, 5, 6 times, going back to 2004. So 6 times in the last 20 years, it has gone above 80, extremely overbought. And if I put a vertical line in here, let's make it pink so it shows up, and we'll just mark the tops of each of these, and you'll see what happened to silver each time relative strength got this high. It's pretty easy to see the trend. All right, there it is. Each time you can see when it goes above 80, silver collapses right after that. Collapses. So I talked about this. I showed this a couple of weeks ago. So that didn't mean that silver was going to go down right away, but it historically, it typically does. So that might be the beginning of the decline for silver. So keep that in mind and continue to watch the videos, because I will show you things like this occasionally. All right, let's take a look at, we looked at gold. Let's take a look at the S&P. We'll look at these real quick. S&P is at new highs again, gapped up today. So very strong, very bullish, continuing to move higher, has lots of room to go, actually. So it could easily continue to go up. Same thing with the NASDAQ 100, gapped higher, sitting at the top, lots of room to move. Momentum is just getting started. It was in a squeeze back here. So it likely is going to hit 7,000. Right now it's at 60. The S&P is at 68.58. So 7,000 is not very far away. Can easily get there. And Bitcoin also moving higher, broke this downtrend line, pulling back a little bit today, coming right back to the 50-day. But Bitcoin looks like it's poised. You can see momentum continuing to move higher, poised to also rally probably back to the highs up here. So those all look great. So let's take a look at the Magnificent Seven. And I actually want to do this. How do I want to do this? I'm going to do it based on, I could do it right here. This is the trend model showing the short term, medium term, and long term. So let's look at the monthly. This is interesting. So a lot of these are reporting this week. In fact, let me actually see which ones are reporting. I go back to the dashboard. So the dashboard here, you can see the large caps that are moving today. Qualcomm, SMCI moving up. Keurig Dr. Pepper reported this morning. Technology is number 1, discretionary is number 2, and these are all of the aggressive sectors right at the top of the list. And those are all basically large cap tech stocks. At the bottom, utility, healthcare, materials. So definitely bullish. You can see this is making new highs. Apple's making new highs. AMD, Bank of America. These are all the stocks making new highs today. Google's in there. IBM. This is the earnings calendar. So we've got Google, Meta, Microsoft. Let's look at those three. Google, Meta, and Microsoft reporting this week, and Apple and Amazon. Google, Microsoft, Apple, and Amazon reporting this week. So let's take a look at the monthlies on those. Here's Google. So there's Google breaking out. It's above its trend line. So likely this one is going to look pretty good. There's Amazon right near a breakout, not quite there yet. Remember, this is a monthly, so each of these bars here represents 1 month. There's Apple, really nice trend higher. You see how it pulls back to the 21. In this case, it's 21 month. So that's almost a 2-year trend right there. Pulls back and then takes off. So if you're looking to get in any of these, not during earnings, because they're going to probably run up into earnings. Meta is right at its breakout. So Meta actually might break out on its earnings. Microsoft also sitting right below the breakout area. NVIDIA, same thing. NVIDIA has a ways to go still. November 19th. Earnings for that, it usually runs up into earnings, probably will again. Tesla is right at a breakout. Netflix is the weakest one of the bunch. And here's Broadcom, looking great. Costco pulled back right to the 21. Palantir continues to move higher. Arista Networks, same thing, moving higher. Oracle, actually Oracle is pulling back right now. So this is a monthly, remember. So for the month's almost over. And Oracle has a shooting star monthly candle, which could be bearish. AMD looks fantastic. AMD is breaking out to new highs. This is just for the whole month, just continues to go up. And then Eli Lilly also, this is a nice little rounded bottom for Eli Lilly. This one might be ready to take off. Comes right back to the 21 month and ready to move higher. So let me take a look at the Magnificent Seven. And what I want to do here is first I'm going to actually I want to edit, show you some things you can do with stock charts. So this is a group of stocks that I put together. I'm going to select them all, and then I want to move these stocks into a chart list, which I call scan dump. Oops. Didn't quite mean to do that, but that's all right. So, well, we'll have to look at that later. We can look at each one of these. So what I want to do is actually I'm going to look at this with relative strength, my number 8. So here's the relative strength chart. So you can see Google. The first two are the most important. The blue one is how does it do versus its peers. The second one is how does it do versus the S&P. And then this is the advanced decline line up here. So there's Google, looks fantastic. Amazon, not as great versus its peers. So it looks a little weaker. Amazon might be the weakest one for earnings. So keep that in mind. Look at Apple. Apple, it doesn't look great versus its peers either. Versus the S&P, it looks very good. So Apple might be a little bit suspect. Microsoft sitting right on the zero line. So it's basically keeping up with its peers in the software group and underperforming the S&P. So Microsoft is right here at a breakout. They report on the 29th. So that one is, I would be undecided on Microsoft. Not sure how they're going to do at earnings. Here's Meta. Meta is underperforming, significantly underperforming its peers and underperforming the S&P. And it has not been able to get back to previous highs. So I would have some questions about Meta. In fact, most of these large cap names, which everyone is expecting to come in with good earnings, the way I look at this sometimes, you can see the advanced decline line actually is improving but it's certainly not back to the highs that it hit back here. So I don't know about Meta. I don't know if it's going to, how it's going to do. NVIDIA, same thing. NVIDIA is underperforming its peers, interestingly, because it's the leader in the semiconductor group, but it's actually underperforming that group. But it is outperforming the S&P. Let's look at AMD. Now there's a stark difference. AMD clearly outperforming other stocks in the semiconductor group versus NVIDIA, which is underperforming. AVGO, also, it's outperforming, but not as impressive as AMD. AMD looks like the best one of this group. If we look at Tesla, which just reported, it's slightly outperforming in both categories, and the advanced decline line looks pretty good for Tesla. Netflix, which did not have good earnings, you can see they have been, this is a good example. They have been significantly underperforming their peer group, and they have been significantly underperforming the S&P. The advanced decline line had been moving up, but couldn't make a new high right here just before earnings. And then earnings, it fell apart, basically. Arista Network. That one is not back to a new high. The advanced decline line has been pulling back, but it is outperforming its peers and the S&P. So Arista, I think, actually might be okay when it reports on November the 4th. So that's what those look like. We'll see how things go this week. It's going to be a really important week because if some of those do miss, the market is going to react as a result. And then we have the Fed meeting on Wednesday. Likely the market will anticipate the rate cut, probably going to get a 25 basis point cut on Wednesday. Then we'll see what Powell has to say. And that's going to move the market as well. So it's going to be a really volatile week, I think. Keep an eye on things as we move. Let's go back to, let's see if I can find my S&P chart again. If not, I'll just bring up a new one. There's the NASDAQ. So right now we're at basically 12:10 Eastern time. Here's the Russell 2000 continuing to go lower. So continues to weaken, especially versus mid cap versus large caps, small caps. Everything's heading down for this one. And then for the S&P is still consolidating sideways. So S&P looks pretty good, but it's really carrying, it's large cap names that are carrying it, large cap tech stocks that are carrying it. There's the cyclicals still moving down. Here's the defensives also moving down. And then technology, you see right here, is the one. Discretionary is starting to move up a little bit too. But technology is really the only place that's supporting this market right now. So if those big cap names do not perform, and they're going to have a pretty high bar to beat. If they don't perform, then this really could start to fall apart because it's the only thing holding the market up right there. You can see it very clearly. All right, that's it for now. Let me know if there's anything you'd like me to look at. I just thought of one that one person did ask me about. By the way, here's the S&P right here. You can see the gap up, but to new all-time highs. Here's the Russell, which is moved higher in the morning, but now it has a black candle, so it's moving back down. And Bitcoin right over here looks strong, but pulling back right now. So the S&P is really where everything is, but basically large cap stocks. So one subscriber asked me to look at was Honeywell. Honeywell reported, had a nice candle up, and then a big red one the next day, red one today as well. It's almost, the two candles combined is almost a bearish engulfing. If we get another third one, if we get three red candles that negates this white one, then that basically is a failed breakout on Honeywell. So we'll see how this one goes. But it looks like they had good earnings when they reported. All right, that's it for today. It's going to be an interesting week. Stay tuned. Keep watching. Please like and subscribe. Let me know if there's anything you'd like me to check out. And any ideas for a Technical Tuesday, which is tomorrow. I don't have any myself because I've covered just about everything. Anybody that's tuning in, there's a playlist on my YouTube channel for Technical Tuesdays, which is educational for technical analysis. You can always go and check that out. And by the way, I promised I would do this, but I did set up in the webinars and newsletters section, I did set up a whole section here for Jesse Livermore. So now I've got a bunch of Jesse Livermore's videos that you can watch at your leisure. Any of these topics, they're very good. All are really good videos. So any of these topics right here on Jesse Livermore, I encourage you to check that out. Again, that's on the webinars and newsletters page. There's a link just for Jesse Livermore, and that's all of the videos right there. This is the last day for stock charts. Members, if you want to upgrade to the next level, today is the last day for that. So I'll remove this later today. All right, thanks for watching, everyone. Have a great day. Stay safe. We're heading into the end of the year. Hopefully we'll have good earnings this week, and that is going to set things up for a nice rally. And be fun to watch it happen. All right, I'll talk to you tomorrow. Take care.